This roadshow is brought to you by ResearchBytes.com.
Good evening once again, and thank you for being here. Without taking much of your time, I invite the CEO to make his opening remarks.
Thank you, Asha. Good afternoon to all of you. Extremely pleased to meet with you to share with your results for the financial year FY15, fourth quarter and the annual results. First, let me start by saying that we just completed the 10th year of our listing. The market value has grown from 8.5 billion to 80 billion. So we had announced a special dividend. So we also discussed about the employees, and then we announced an employee reward scheme today where we are distributing 2,628 crores for all employees who have completed 1 year and above. Now coming to the results of the quarter, we had said that this is a weak quarter, and in this quarter we have delivered good results. Our constant currency growth has been 1.6%, but we had warned that the cross currency, and due to the currency volatility, is going to be huge, and it proved to be really worse. So in rupee terms, we have lost about 270 basis points due to cross currency. So we delivered a total revenue for the quarter of 24,220 crores. And our operating margin, I must say, given the low growth, has been exceptional. The teams executed very strongly. So our operating margin for the quarter has come at 27.2%. And the net profit also did exceedingly well, and we delivered 5,906 crores of net profit at 24.2%. In terms of the markets, in terms of the industries, and in terms of the services, nothing much to specifically mention except that, as we had highlighted before, we've had three headwinds, and all three of them played the part. We had a strong headwind in the energy sector because of the oil situation, and we had a huge volatility which affected the telecom sector, and we had headwinds in Diligenta, our insurance platform. So those are the only comments I want to make with respect to the markets, industries, and services. But the clients addition have been phenomenal. We added significant number of clients in each revenue bucket. We added 400 million customers during the quarter. The deal wins have been extremely good. Order booking is strong. Then let me give you an idea of the yearly figures. On a year-on-year basis, we had a CC growth of 17%. All of it is through volume. 17% CC growth, and the volume growth for the year is also 17%. And the rupee terms, it was 15.7%, and dollar terms, it was 15%. And the net income for the year, excluding the one-off payment to the employees of 2,828 crores, 628 crores, is 21,696 crores. And the year operating margin pretty much stayed within our band at 26.9%. And the incremental revenue for the company is in excess of $2 billion, which is again a benchmark. And very strong client additions across all segments. $100 million clients up by 5, $50 million up by 15, $5 million up by 26 clients for the year. I think those are all the yearly highlights. And as we look into the future, I think we are extremely well placed. I also want to share with you the fact that our digital platforms, the cloud platforms have done exceptionally well. Our cloud platforms together have delivered $125 million of revenue at an annual growth rate of 55%. So we see a lot of momentum, and we expect that that will continue to do well. So as we look into the future for FY16, our deal wins, our order book, and the client sentiments all look positive, and we are very confident about FY16. Thank you.
We'll take questions now. First to go is Nisha Poddar from ET Now.
Good evening. Chandra, as far as the results go for Q4, slight miss in revenues, slight miss on bottom line as well, and margins look better. You have stated the three headwinds that had been the key driver, and you said that the demand had been strong. What were the other factors which led to the expectations being a little higher than what you have reported?
I think first one correction, bottom line, there is no miss. Bottom line is in excess of even the highest estimate from the street. Significantly higher than every estimate in the street. We have delivered 5,906 crores. I think the median is around somewhere between 5,300 and 5,400. So I think the vis-a-vis estimates, market estimates, both operating margin and the net profit, net margin is above the estimate. Yes, on the revenue line, a tad below the estimates. And basically it is the three headwinds I talked about. We have had a dip in telecom. We have had a dip in diligent revenues. We had a dip in energy sector. All of these three we called out, saying that we are seeing headwinds and we are seeing volatility. And the energy sector is a pretty small sector from our point of view, so it's very difficult to predict given the current conditions. But otherwise, if you see any of the other mature sectors, there is no surprise.
So you've reported the numbers also with X adjustment, which factors in the bonus amount of 2,628 crore rupees. So that will all go in the last year's balance sheet, while we were expecting it to be staggered in the next financial year.
No, we have taken the charge this quarter.
In this quarter.
That's why you got the adjustment and the final number, reported number.
So the market murmur is that you'll be the biggest beneficiary of a large part of the 2,600 crore rupees coming in as bonus. All right, Rajesh just wanted to get a breakup of the margins. Margins have been better, but what is the cross-currency hit and where the margins have performed better? What is the breakup of the whole thing?
So on the cross-currency, we have lost about slightly below 50 basis points. About 48 basis point is the impact of currency on the margins in this quarter. And overall, we have gained about 70 basis points. So net up from 27 to 27.2. Primarily, the margin difference is coming from slightly better realization and a slightly better offshore mix and overall operational efficiencies and drivers that we have been moving. So all in all, a tight quarter. We were expecting some amount of weakness, so we were managing it tightly and quite pleased about the outcome.
And Chandra, the most important question which the market is watching out for is the FY16 guidance in terms of you beating the industry average in terms of growth. So that are you confident about? And what is the projection going forward? How confident is the company about this financial year?
See, we don't give guidance. Okay, we don't give guidance, so we are not going to change that. But if you take the industry estimate as the NASSCOM estimate, we always said that will come above the NASSCOM estimate. That's the general take. That's the only commentary we have said, and we'll stick to that. We won't say anything more in terms of guidance.
And you see good amount of demand, traction in terms of pipeline coming in terms of your business and the areas of growth. So could you give us some more understanding and color on that?
See, if you take the different countries, we have a huge traction across markets, whether it is North America, whereas UK or continental Europe. For example, continental Europe this year has delivered 28% on CC terms, and there is no reason that it should slow down. The current engagements, the pipeline we have is continuing to be good, and India has been muted. And while we have done well, but if you see the overall growth, India still lags behind, and we need to see. So I can't comment on India yet, but LATAM has done well on constant currency term, but lost out on reported terms due to heavy cross currency when you convert the numbers. So those kind of issues are there. But in terms of deal momentum, pipeline, client traction, client spend, etc., we have no concerns,
And
except
better,
the three I have highlighted.
better than FY15 will be FY16.
Not
Will you
commenting
hazard a
on
guess
that.
again?
Not commenting on that.
All right, and will it be well spread in all 4 quarters, or like last financial year, it would be more top heavy with H1 being better than H2? What is your?
You see, our take is that this is a Q1, Q2, always H1 being better than the H2. That has been the trend, and that for well-known reasons. Q3 usually has holidays, has Thanksgiving, has Christmas vacation, has furloughs, client budgets may suffer. All those things are there. So it tends to slow down in Q3. And then Q4, that's the Q1 for most of our clients, the pickup doesn't start, the discretionary spend doesn't start immediately. So I don't see any reason why that trend should change. It will be a Q1, Q2 higher than Q3, Q4.
All right, you're still being a little muted in terms of giving projection for the next financial year.
You've never given guidance.
I'm not saying guidance, I'm saying outlook.
Numbers I'm not giving.
All
I've
right.
given you color.
All right. Ajay, just wanted to understand, the bonus is announced. Is there a salary hike that you have announced? Because we haven't really managed to read all the papers that you've given.
No, we have announced a salary.
What is the percentage?
On average term in India, it is 8%, and we are saying that from overall, people will see anywhere between 6 to 10, depending upon the performance and everything else. But average hike in India is 8%. Average hike overseas is 2 to 4%.
All right. And in terms of hiring for the next financial year, what is the plan?
See, hiring, what we are going to do is close to about 60,000 at this point in time. So that is what we are taking. And as you know, the trainees, whatever offers we had to give, that we have already given as far as India campus hiring is concerned. And then the rest of the hiring will happen as we go forward each quarter. And we do calibrate at different points in time.
So you ended with how many employees, and how many employees are you expected to end the next financial year?
This year we ended with 319,000 plus 656, 319, 656 is the total head count. And next year, as I said, the gross addition number we have given, and depending upon the attrition and the net addition, the total employee count will be a factor of that.
Over to Kritika, CNBC.
Hi, gentlemen. Breaking tradition, I'll ask Ajoy first. Ajoy, the attrition rate as a whole is 14.9%, if I'm correct.
Correct.
That's higher than last quarter. Is this due to the seasonal impact that Q4 usually sees, or is there some additional hit?
See, seasonal point of view, Q4 usually is lower.
Yeah.
That is if you go back in time. And what is happening at this point in time is primarily the growth and everything else, the opportunities in the market, the way we are hiring, other people are also hiring. So as a result, the attrition has gone up. And what we see is that going forward, we would try to bring that attrition down. So that is the plan at this point in time.
Okay, Chandra, I wanted to ask you about insurance. There has been some amount of pressure, of course, in insurance that you've seen. What is the order book looking like now? Because there seems to be some amount of concern coming in from US. There's some amount of concern coming in from Europe, excluding continental Europe. How long to actually see some steadiness over there? Where are the headwinds coming?
I think our deal wins in insurance has been very good in the last 4 months, I would say. So if you take our insurance business, the way we report it includes both Diligenta and the rest of the insurance business, which is the services business. Our headwind is only in Diligenta.
Okay.
The rest of the business is doing well, and it will continue to grow very handsomely.
So what is the hit on Diligenta largely because of, if Chandra and Feroz both could highlight that?
Basically, we had a large transformation program, which has now come to an end. The nature of the business is run off. So you just have to wait for the next big transaction to come in, and that's when the uptake takes place. So it's sort of, with the runoff of the books, you get a decreasing revenue, and the next uptick will come when you sign the next big deal and do a big transformation program. Those are traditionally 60, 70, 80 to even 200 million pounds that you bill over a period of 4 or 5 or 6 or 8 quarters. When those run off, you obviously have to wait for the next transaction.
Okay. Chandra, in terms of the macro pressure that you're seeing in the energy sector, most of your global peers seems to say that this pressure will continue for the next 2 to 3 quarters at least. Have you factored that in when you make your adjustments for FY16?
Yeah, I think the energy sector, we think it's going to be muted for the time being. So we have taken that into account for the energy sector. So as I said, energy sector muted, telecom highly volatile, and it's going to be like that for some more time, we believe. That industry itself is kind of reinventing itself. And otherwise, the only other call out I made was Diligenta. From a markets point of view, India has done very well from where we started the year, but still we need to see acceleration in growth.
Okay, Rajesh, you said that margins have been, or the negative impact of currency on margins has been offset by better realization and offshore mix. Can you give us a breakup of that, and also given the kind of changes and given the kind of volatility that we've seen in currency, all your peers have indicated that this will be a big hit. Does it make sense now to look at revising your hedging strategy, or will this remain the same for now?
So we don't, as the business is becoming more complicated, we are not breaking out margins by offshore and realization. It's an easier one to give you color on the revenue side. Okay. So the impact of realization on revenue is a positive 0.9%, and the impact of offshore is about 0.6%. So that gives you an idea on the revenue side. As far as hedging strategies go, hedging strategies are continuously to be reviewed in the light of where the currency mix is. We think the extent of volatility that we are experiencing is unprecedented, and it is more prudent to maintain a stable policy and take a call once we have a better idea about where the overall scenario is likely to go to. So as of now, no major change to the hedging policy, but yes, it's a volatile environment and the impact is going to flow through.
In terms of pricing, Rajesh, are you seeing pressure there? Because your global peers seem to have indicated a clear stance that there is pressure when it comes to the larger markets.
As we have maintained, we don't see significant pricing pressure, and we report realizations on a quarter-on-quarter basis. And if you look at it this time, the realizations are up about 90 basis points, or the impact of realization on revenue is up. For the full year also, on FY14 to FY15, the realization impact is absolutely flat, which is in line with what we have been saying, that these are more reporting trends rather than actual pricing pressure. So overall price environment on a like-to-like basis remains fairly stable.
Okay, Chandra, we've been talking about digital and how huge a boost this will be for the IT sector. Still no breakup in terms of significant revenues coming in. Now that there is some clarity in terms of order book, can you give us a sense on how large the order book is, how large in terms of size, some kind of color as far as digital is concerned?
I think we're not dealing with those numbers yet. But the only thing I have shared with you just now in my commentary is that the cloud platforms, which is our ION platform, assessment platform, and 5 other horizontal platforms, all of them put together, we've delivered $125 million this fiscal year. That's a 55% growth over last year. So we see momentum for those businesses, which I think will continue. But digital, from a services perspective, is a huge opportunity. We're doing good number of engagements, but I'm unable to share any numbers with you.
Okay, Chandra, one last word. As we started the year, there was optimism. You had given a clear indication that FY15 will be a good year, possibly better than FY14. Things changed in the second half. There's been issues in terms of currency. There's been issues in terms of individual verticals. What really has changed over the last 1 year? And now as you go into FY17, are you more realistic when it comes to the fact that there are evident pressures and evident changes that the IT sector is seeing?
I think first and foremost, I want to tell you is that it is incredible performance. 17% CC growth and 15% dollar growth, 15.7% in rupee term growth is an incredible performance. It's just that particular statement I made raised the expectation by another 1% or so. And that is what we are talking about. Otherwise, if you look at numbers, incremental revenue more than $2 billion, You look at the profit growth, if you look at every other parameter, customer growth, industry leading performance, so in every dimension. So it's an incredible performance, so we are not apologetic about it. So first I want to deliver that message. Having said that, so the currency thing is not not in our control. As I said, in terms of segments, we report out BFSI, but if you look at BFS per se, has done exceedingly well. Insurance also, if you split Diligenta out, then it has done very well. But Diligenta also, I want to tell you, it's a little bit of a different business. We can't measure Diligenta on a quarter by quarter basis. Because Diligenta deals take long time to materialize. Cycle times are very long. And then once they come in, they kind of take a number of quarters for you to execute. So it is not that that business will not perform. That business will continue to grow and continue to bring in new deals. But when the deals run out and new deals have not been signed, it will have a decline in revenue, and we've got to manage that. And that's what the situation is with respect to Diligenta. But energy and telecom, I already told you.
Okay, quickly, the $423 million bonus that you've given, just break it up for us. How has it been structured across the board?
It's a very simple formula. It is a 1 week salary for every employee who is completed at least a year.
12 months completion.
One for every year of service.
Okay, Reena from CN.
Global.
Hi, congratulations, and also on completing 10 years of listing. First, Chandra, could you tell me what the FY15 organic constant currency growth is?
Little over 15%, maybe somewhere around 15%.
Okay, so if I have to say it on a like-to-like basis, compared to FY14, 16.2% growth, you would say this year's growth is lower than last year's on a like-to-like basis by about 1%. And it's only explained by those three factors.
Yeah.
Okay. Rajesh, on the subject of margins, now we can expect, it's possible that currency will play spoilsport even in the coming year. Now, if you're faced with a choice about, maintaining your stated margin guidance of 26 and 28% versus calibrating investments, because if currency goes against you and it starts eating into your EBIT margins, and then you have this choice, what will the company opt for? Will you, perhaps lower your investments into the company in order to maintain this EBIT margin guidance?
The company will opt for strategically prudent options. And as we said, we made our choices. We will back our investments. Incremental investments will be calibrated based on the headroom that is available.
So what's the extent of incremental investments? How much can they?
As I said, incremental investments will be calibrated based on the headroom available. So we will see what the headroom available is, and on the basis we will calibrate it. Any investment on the ground will be backed fully.
So as of now, you maintain your guidance, margin guidance band for this year, for FY16?
As of now, our stated operating margin band stays constant, and it is always subject to review based on the volatility that we see. Short-term currency volatility will sweep through, but strategic change to the guidance will be communicated at an appropriate time.
And just for the near term, how much will the wage hike impact your margins in Q1?
We will talk about that when we talk about Q1, but typically it should be in the range that we have seen in the past also.
Okay. Chandra, coming to digital, you've given the only numbers that you've given us is $125 million and a growth.
That is not digital, it's platforms.
That's the cloud platforms, yeah. So, is there, give us some color to tell us how is, digital going to be compared to the previous year? Or the only other number you'd given us was say $3 to $5 billion the company will hit in terms of digital revenues in the next few years. Do you see enough growth that perhaps you can advance and hit those, digital growth targets earlier than you had earlier anticipated?
See, every company that we work with is engaged with us in some form or the other in digital. And some companies ramp up fast. Some companies are able to accelerate their discretionary budget towards digital. And some companies are trying to take cost out of their current portfolio to be able to reinvest in digital. But there are enough engagements that we are winning, but I can't quantify today whether it is going to contribute X% or Y%.
Just one question on attrition. I know Kritika already asked that, but attrition has not just gone up this quarter, it's actually been going up for the last few quarters. So it was at 10.9% in Q3 of FY14, and since then it's been steadily rising for the last 4 or 5 quarters. Now with growth picking up for the industry, what would be a sustainable attrition range that you see for TCS?
See, last year, as I said, we ended at about 11.3, 11.4. This year we have gone up to about 14.9. And as you rightly pointed out, it's been going up each quarter. So that is what I've been saying all along in the last quarters as well. That it is in a way related to the whole market, the whole industry, the way the growth is. So there are opportunities in the market. Now, as far as what we would like to do is, we would definitely try to bring it down. That is what we would like to do. But where it would end up will be a very difficult question to answer. So we don't have a crystal ball to say that. Because it's a whole industry phenomenon. It's not anything and everything is under our control. But from our point of view, we would definitely like to bring it down.
Okay, CNBC, we'll come back to you. Over to Priya from Bloomberg.
You've said that several of the sectors like oil, telecom have been muted for the industry as well. Can you give us a sense on the kind of discretionary spending for the year ahead in FY16, and what is the kind of mood around spending for several sectors?
See, based on our discussion with clients, our own feeling is that there will be a slight uptick in the spend on the discretionary side from clients in our client segment. And that is true for BFS, that is true for retail, that's true for manufacturing, that's true for most of the sectors. And energy will be an issue, and telecom is going through transformation. So we kind of seem to be facing volatility across markets also all the time. We have faced it in Asia before, then 2-3 quarters before we said we have an issue in Europe, then we find it in US, and this kind of jumps around a little bit. So I think barring those two sectors, I believe that the general trend in our client segment is that the client budgets will increase for discretionary spend, most of which will be towards digital.
Right, you had said, a few quarters ago, India had seen a bit of a pickup, and then again it's been quite volatile and muted in this quarter. Going ahead, when do you expect the India market to actually take off in terms of revenues? I know it's not a significant portion of your revenues, but when do you see that kind of uptake?
See, I think India, first of all, India has done exceedingly well, where we started from last year, and even this year when I originally gave commentaries. We had a couple of good quarters. Even this quarter they have come flattish. We have not really degrown or anything. So I think the signs are positive. We think that we are not going to see major dips. But having said that, it's a volatile market because of the size and nature of engagements that we do. Not enough annuity revenues. All those things are still issues in India. So I think we've got to wait and watch. But I think that we will continue to grow.
Right, can you run us through the kind of which sectors have seen the highest additions in terms of clients? You've said across bands you've added, so if you could highlight that.
I mean, clients have been added across all sectors. In this quarter itself, we've added in BFS, we've added in retail, we've added in media, we've added clients in utilities, we've added clients across. And we've added 5 large deal wins this quarter in North America. So I think it's been pretty well rounded.
Right, and my last question is on the deal rebid market. How do you expect it? A lot of players are getting aggressive, for market share in this market. So how do you expect it panning out going ahead? A lot of deals are coming up for renewal.
So I think that is not a phenomena just for this year. Deals come up for renewal and rebids all the time. It's a phenomena every year that happens. And there will always be deals which you will be able to do. There will be always deals which you will not be able to do. So you've got to qualify. We have a very disciplined process. So we would like to qualify up front and then want to make sure that we win the deals we want to win.
Thank you.
Devina from ET.
Good evening, Chandra. This kind of bonus, is this the first time we are seeing it in India Inc., such a large bonus being distributed?
I think that should be a question I should ask you.
No, but from your calculations, what do you say?
We have not done any external research. So this was a discussion in the board because of this particular event. So it was considered favorably, and then we are very happy that we were able to share it with employees.
Right. And few questions to Ajay out here. The promotions, if you could throw some light on the promotions that the employees can see.
See, promotions we have throughout the year. We do have quarterly promotions at junior level, and then we have our main promotion runs in July and then in January again. So it will be usual practice. So there is nothing changing as far as our overall promotion policies are concerned.
Okay, and also now when competitors are differentiating between the top performers and the average right now, so the average increment right now one can expect is around 6 to 10.
Average overall is about 8%.
About 8%.
And depending upon the performance, the band distribution will be 6 to 10%.
The top performers would be around the, I mean, is there anything else for the top performers?
Let's take average as 10, and there will be a few who will get much more than 10. There will be a few who will be somewhere in that range. Otherwise, I'll have to go through the full details of the whole process as to how we do it. But I think as an average top performers 10 is the right statement.
The average top performers is 10.
10.
Shivani from Business Standard.
Hi. Can you hear me? Yeah. Hi. Hi. Chandra, 1.4% volume growth does look really good if you compare it to last quarter. I don't know if you've answered this question already, but could you take us through what's really contributed to the volume growth? 1.4, and I'll have follow-up questions.
Let's go 1.6.
For the quarter.
No, I think it has been a Q3, Q4 is typically sluggish quarters, and we had said that this will be muted. So the growth has been pretty steady across industries, except negative growth in telecom and energy sector, and all the other sectors have grown pretty muted. But if you take the overall volume growth, if you exclude these sectors, the growth will be 2.7%. Volume growth.
For
excluding these two.
So the quarter 4, this is
excluding Diligenta, these three. Then these three, if you take the remaining, if you see, the growth is about 2.7%. So it's pretty strong, I would say. But from a market point of view, I think even in this quarter, Europe has done very well, and even UK has done well in spite of the drop we had in Diligenta. North America has grown marginally this quarter. So I think it's been a well-rounded, even though it's a small growth, it has been pretty well-rounded. So one of the themes that we have been driving all along, and we have been pretty successful at that, is that we grow very distributed across markets. We also grow pretty distributed across sectors. So which has played out. So these are the things that, these metrics and the client metrics, the order book, these are the things, you kind of give you in good shape.
Right. An update on Japan, how is that working out?
Japan has done very well this quarter, again. So Asia has done very well this quarter. And Japan particularly has done very well. So I think it's still early days. It's only 3 quarters. So let's wait.
Right. Firoz, a bit on Diligenta. Last time we had a talk, you said that you are taking it into other markets. Could you update it, especially to the US? Could you update it in terms of the traction?
There is a couple of opportunities in the US and a couple of opportunities in continental Europe that are being pursued. As Chandra mentioned earlier, the nature of this business is you sign a contract and then it runs for 10 years or 15 years, but it takes you anywhere between 1 to 3 years to sign the contract.
It's a long time. Right. Ajoy, salary hikes of 8%. Would you say on a year-on-year basis the numbers are kind of becoming single-digit? 6 to 8% is what I think heard last year. Please correct me if I'm wrong here. And do we see that this is going to be a band which is going to be consistent?
See, the salary hikes are dependent on multiple factors. It's based on our overall business plan. It's based on the overall the kind of inflation that you have in various countries. So all these things are taken into account, plus the market. So it's a factor of all that. And the way we are able to attract people. So it's all these things are taken into account to arrive at this. Plus, the fact that employees have contributed, so there has to be some sort of a reward. So all these are taken into account to decide what the increments are going to be. So this year average is 8%, which is pretty good.
Right. And one just final question, Ajoy. The campus numbers are what?
Campus, what we have given is 35,000. And for people to join from June onwards, and that process is already over. So they will come in from next year onwards, from this June onwards.
From this June. And Rajesh, on the foreign exchange, do we have gains this quarter? Or could you just elaborate a bit on that?
So our total gains from Forex is about 660 crores in this quarter. Broadly coming from the most volatile has been the euro, so primarily coming from that, and a bit of volatility in the GBP and the US side also. But Forex is 660 for the quarter.
Sheetal from Business Standard. Okay, Shivpriya from ET.
Hi, Ajoy. I just wanted to check with you, is this an all-time high attrition rate for TCS? Because I think traditionally it's been below 13%. So are they, I mean, this is obviously very good, kind of a bonus which you've announced, but are there any other measures which you plan through the year to kind of boost employee morale?
See, the answer to the first question is no, it's not all-time high. All-time high has been much higher. In fact, as close as if you go back to FY12 Q1, we were at 14.8, 14.9, somewhere in that range. So, as I said, it's something which is related to the overall industry, the way the market is growing and everything else. From an employee engagement point of view, from an employee care point of view, what we do and the number of benefits and everything else, these are pretty good. So, there's a lot of effort that is going on in engaging with people. There's a lot of work that goes on in terms of career planning, in terms of career growth, and those kind of effort will continue. And I think overall, if you see the kind of mood within the organization, the employee satisfaction that we run, all these things, these are all pretty good. So there's nothing to be totally concerned about or anything at this point in time. But the overall attrition number per se, yes, it looks a bit high.
And Chandra, I just wanted to check with you in the light of some of the measures which your peers are also doing to prepare for the future. Disruptions, etc. Because I mean, the IT industry is going through a disruptive phase where you have to like really think ahead and prepare ahead. So, are there any other kind of long-term initiatives from that point of view? And given that one of your peers has a CEO from a products company, will TCS kind of also keep pace with that? And what kind of talent do you plan to recruit to kind of get in that mindset?
See, I think we have always been forward-looking in terms of the investments that we make. We have done two things. From the digital cloud point of view, we have invested in a number of platforms over the last several years. And those platforms are the platforms, I said, are beginning to show the revenues, and the reason I announced it this quarter is because they've crossed the 100 million together. And 125 million and a 55% growth year on year is a pretty credible thing. So these are the cloud platforms or the software as services platform. The other side is the investments we have made in terms of machine learning, in terms of, you want to call it artificial intelligence, robotics, we call it neural science and machine learning. There we have come out with our own products. The initial pilots are extremely successful. We will be announcing it shortly. We call it is service as software. Service as software, because it automates. The cloud platforms are software as a service. This is service as software. So that's our big initiative, and we will be announcing it during the next few months. So initial pilots are extremely solid. So I think there are a number of initiatives that go on, and we have a very strong research group. We have a very, very strong technology office. We have innovation centers in every industry. We have market presence. We are close to Silicon Valley. So I think it's holistic from industry innovation labs to pure research to applied technology groups to innovation ecosystems, which we have based out of the California and in Silicon Valley. where we have a customer collaboration and innovation center also, and we have a coin network. I think these are things that we have very strongly present in and deeply rooted in, which is something that we have built. So it's not a one-off and we do something today or tomorrow. I think we are extremely well placed to participate in, you call it the digital revolution, consumer economy, Internet of Everything. We call this as the opportunity of digital reimagination. And we're extremely, extremely well placed.
Nivedita from Reuters.
I have one more on digital. Is it a question of the way you are digitizing your businesses? Is it a question of taking all your current or upcoming projects and turning parts of that in like digitizing parts of that, or are you thinking in terms of going the way more like one of your rivals like Wipro has done, create a new digital vertical? And I mean, is there merit to that?
We've been at digital for 5-6 years now. Okay, we coined the term digital reimagination 4 years ago, and now this year the company's mantra is default is digital. So we have said that default is digital. This is for everything we do, whether it is our internal learning system, whether it is our campus recruitment system, whether it is the travel approval system, whether it is customers' business we do, whether it is the CSR work we do, where we build a digital application on how to save fishermen. Okay, digital reimagination is a mantra for every manager in the company. Okay, that's the way we have to live. So default is digital in every walk of life as far as we are concerned. It is true for the world, it's certainly true for us. And that's how we approach the business. So how we are running the business in terms of a client perspective, digital reimagination is embedded in every unit. We will have a digital group which has strong capabilities in various disciplines of digital. Could be mobility, could be cloud, could be. But digital as a theme and as a core offering, as a core capability, whether it is in terms of architecture, whether it is in terms of technology skills, domain skills, how do you work with the business in thinking through the point of arrival. This is pretty much embedded in whether it is in BFS, whether it is in insurance, whether it is in retail, whether it is in travel, in every unit it's embedded.
So for that core team, are you hiring differently? Are you looking at maybe more tech product companies, people from tech more product companies to join, or what is the POI there?
We do both. We hire people from everywhere. We also significant investment we're making in training.
A lot of effort.
So it's a
building the capability.
So we have. I mean, I can get into a lot of details, but basic point is that it's a question of retraining people, also as much as you hire people from outside.
How much?
But we don't announce every hire we make.
How much in investments can we expect, or are you thinking in your heads towards be it training, be it getting other people, or investing?
I'm not going to quantify a number for you. I can only tell you that it's pretty significant.
Okay. Adit Charlie from HPL.
Hi, couple of questions. Firstly, this 2628 crore of you call it a one-time special employee reward. Is it completely going out of the cash and cash equivalent? And if yes, then what's the impact on interest income?
No, I mean when we distribute it, it'll go out of it. But
okay.
As of now, it's just a provision that we have, or a liability that we have recognized.
Okay, so the actual payout is going to be happening. It's going to be a staggered.
Oh yeah, it's been approved by the board today. Okay. So it will get disbursed during the course of the next month, or during the course of April and May. Probably likely to in May.
Right. Secondly, I think one of the former TCS employees in the US has actually gone to court stating that TCS discriminates against Americans in favor of South Asians, especially Indians. Any comment on that?
So I think, from our point of view, it's not true. So we will fight it.
All right. Lastly, Chandra, you mentioned services as a software. Correct me if I'm wrong. Is it a M2M initiative?
Huh?
Is it a machine-to-machine initiative?
It's a machine learning, yeah.
Machine learning. So this is basically bringing in automation for some of the low-end works. Okay.
No, it's not. I think low end is you are adding, I'm not adding that. Okay. So it is a neuroscience program. It is a self-learning software, and we have done pilots. Pilots are extremely successful. Customers are very happy. We'll be launching it, but wait till we announce it.
Srijit from Cogensis.
Yeah, we've asked this question before as well, but since the thing is changing so much, I think you can update it. What is this? This 125 million of cloud revenue. How much of that is actually TCS branded revenue, and how much of it is service revenue? I just want to get an idea of how you see it going forward.
These are all our own platforms. Predominantly our own platform. Pretty much 90% is our own platform.
And one small number, what is the involuntary attrition last quarter?
Overall this year, see, last quarter was very similar to what we had in Q3. Overall, as I have been saying, the involuntary attrition is somewhere around 1 to 2%, and we have been within that range even this year. For the quarter, involuntary attrition, see, this particular quarter we had 14.9, which is the whole year, because attrition at the end of Q4 is for the last 12 months. Every time we give last 12-month attrition. So that is how we measure. And we have been in that 1% range.
Significant, he can give you the number.
So it's, yeah, offline if you ask, we can get into what are the numbers. But overall, involuntary attrition has been around 1%.
Okay. Final question.
There is no spike.
There is no spike or anything of that kind.
That's what you want to know. So I want to address that.
Okay, one final question coming back to the growth in this quarter. When y'all had spoken in March, you'd indicated that Q4 growth will be similar to the trends of last year. So that gave us an idea that the constant currency growth would be perhaps 1.92% to be precise. It's come in lower at 1.6%. Did anything change?
Let me set the expectations on that. Our commentary is based on what we see on a 25,000 crore quarterly base and a 94,000 crore annual base. I personally, when I make a statement, my tolerance levels are a lot more than 30 basis points. So if you expected 1.9 or this thing, plus minus some of it, that range. So when we talk about the margin also, when we say 26 to 28, the whole idea is it's an ongoing, fairly complex business.
So it's in line with what the quarter
To us, it's in line. We said that it's directionally.
The margin of error on that size cannot be 10 crores.
Thank you very much. Please do join us for a cup of tea.